Alright, so in this video, I'm doing a weekly update of my portfolio with Questrade. I've got 4 accounts with Questrade: Margin, TFSA, RRSP, and RESP. So as of January 8th, total equity with Questrade is 109,553 Canadian. Market value, so basically what I have invested in equities, is 32K and 77K cash. So now I'm going to go look at all the individual accounts, so all 4 accounts individually, what I hold in them specifically. So just right off the bat, I always get asked, am I up for the year? So overall, I'm definitely down because of March. March 2020 really hurt me, but my portfolio did go higher because of contributions, monthly contributions that I make. So my total portfolio went back up, but it isn't necessarily all gains. But like I said, I just like talking about it, even though it's nothing special, but I enjoy reviewing my portfolio, talking about my trades, talking about potential purchases, and also getting feedback via the comments on what to buy. So in my margin account, like always, it's all option selling strategies. So I don't own any stocks or any shares. So I've got Adobe here, a put spread expiring February 19, 465, 460. So basically I need Adobe to stay above 465 by February 19 for me to win on this trade. I collected, I think, $1.39. So one contract, that's $139. I keep that as long as Adobe stays above 465. I'll probably try to close it for 50% whenever I can before, so I don't have to wait until February 19. Although Adobe this week dropped all the way down to 470, so that wasn't too comforting. I've got an Amazon put spread. This one is after earnings, right after earnings, so it includes earnings, but I plan on closing it before earnings if possible. Now it's at 2,900 strikes, so it's pretty far from the current market price. I think Amazon is trading at around 3180. We can go see right now. Amazon is trading at 3182, so it's pretty far if nothing crazy happens, so it should be safe. I've got a BABA put spread expiring February 19th. Now that one's doing pretty bad because my short strike is 255 and BABA is trading, I think, at 228 or even less, 236. Okay, and it keeps going up and then coming back down. So right now it's at 236. I still have time until February. If I go back to my account here, we could see how much time. I need 39 days. I need 39 days for BABA to trade above 255. It's possible, but if not, I'm going to have to take action with this trade. My plan is to maybe convert it into a short put, which if I do it, I'll explain in another video. But I did the same thing with my CRM put spread that was completely breached, which you could see in my previous video where I show my profits for the week. I also have a Beyond Meat put spread expiring February 19, 115 short strike, and Beyond Meat I think is it's pretty close actually. I think it's like 119, yeah, 118. So I'm only 3 points away from being at the money or even in the money. So yeah, that one's kind of close, but I do think it's oversold, so I think it's gonna come back up easily. And I still have 39 days to go, so I'm not that worried about Beyond Meat. I've got Fubo. Fubo was doing terribly this week. At some point, I think I was down $1,500 on this trade. Now I'm only down $500. I've got 4 days to go. It expires January 15. I've got 3 contracts. I've got the 30 put, and I think Fubo's trading at 27. Yeah, 27.3. So I need Fubo to go above 30 for me to win on this trade. If it stays at 27, then I have to close the trade for $3. Therefore, I'm going to lose $1 per contract, so that's $300. But most likely, if it stays below 30, I'm going to roll the trade. I'm going to roll the put by buying back this put and then selling the February 19 put, either the same strike or at a lower strike, but making sure that I'm collecting more from the second expiry than I'm paying to close this one. So therefore, I get a net credit from rolling. That's what I'm going to look for. And then I've got a Moderna put spread expiring February 19. Not doing too well because Moderna keeps coming close. It hasn't dropped below 100, but I think it's trading at around under 110, I think. Let's go see. Moderna's trading at 112. Okay. So it's trading at 112 and I need it to stay above 90, so it should be fine. by February 19th. So I've got 39 days to go. So in this case, usually if I have 39 days to go, I should be happy, should feel good. But I feel like the longer I am in this trade, the riskier it could be, because it gives more time for Moderna to come down instead of to go up. So hopefully this one works out. I've got a Netflix put spread. This one is also after its earnings. So my short strike is 470, so it's pretty far. I think Netflix is trading at around 510. Let's go CNFLX. Yeah, exactly 510. My short strike is 470. So as long as Netflix stays above 470 by January 22nd, this trade's a winner. And January 22nd is only 2 weeks away. Yeah, 11 days to go. So that's pretty good. Has a good chance of winning. But the problem is that it's after earnings. So earnings might affect it and the stock can drop hard after earnings. But I'll try to close this trade before earnings if I can. That's the plan. And I don't think it's closable. But as you can see, the premiums have dropped. So I sold the 470 put for $7.42. You can see it's worth $6.25. Same thing for the long put. So the premiums have dropped, but not enough for me to close the entire spread for a profit. I've got a Sumo naked put, one contract at a 30 strike expiring this week, January 15. This one's also a loser right now. It's losing $61. So I've got 4 days to go. And I think, let's see where Sumo's trading at right now. I need it to be above 30 by January 15. It's at 27.7. So right now it's in the money, so it's not doing well, but hopefully it can go above 30 by this Friday. If not, I'm going to have to roll it like I'm going to roll Fubo. So there's a small chance that Fubo and Sumo become really good winners if they go above 30 this Friday, because I can probably make $2 here and $6 over here. Now most likely I'm going to close it for 50%, but it would still be a decent profit. I've got Wish that expires February 19. I actually had a chance to close it for a decent profit, not necessarily 50%, but I could have closed it for about $1.20. So I sold it for $1.80. Could have closed this trade for $1.20, so I keep the difference, so about 60 cents times 2. So that's a $120 profit I could have made this week. But I wanted to close it for 50%. So I'm going to hold on to it a bit longer. It's a 17.5 strike and it's until February 19th. So I still have a lot of time. And I think 17.5 is pretty low. And then finally, I've got two Zoom put spreads. One of them expires January 22nd, 330 strike. The other one expires February 19, 290 strike. So the 290 seems safe. It's pretty far. But the 330 doesn't look too good because I think Zoom this week dropped below 340. And let's see what it closed at this Friday. It closed at 349. So I'm 20 points out of the money. But with Zoom, it could drop easily 20 points in one day. So this one's not too safe. But we'll see. I've got 2 weeks to go. Hopefully Zoom stays above 330 by January 22nd. So that was my margin account. In my TFSA, it's mostly individual stocks, putting in $1,000 at a time. Anything that looks good, that dropped hard, mostly dividends. I'm focusing on dividend stocks, and any quality company that dropped hard. So like something like Baba, for example, I bought at 225. I bought 5 shares at 225. The next day it went up, and then after that it dropped to 222, so I could have gotten a better entry, but whatever. I got in at 225, not so bad. It's up right now at 236, so I'm up $54 on this, 5%. I've got Bell, which is down a little bit. Good dividends, 5% about. Bank of Nova Scotia as well, 5%, but I'm up on the shares as well, $252. I've got Choice Properties. I've got Gold. Gold was above 180 this week, but came back down. So I'm down a little bit on gold. I've got Manulife up $275. I've got MMP up $212. I've got Realty Income. I've got Pizza. I've got RioCan. I've got Smart Centers. I've got AT&T, and I've got TD, which is a great Canadian bank. So in my RRSP account, it's interesting. I'm trying to do covered calls on stocks that trade around $20. So I'm trying to put in $2,000 chunks in stocks that have decent IV, decent implied volatility, so I can sell premiums on them. So I've got 5 stocks right now at around $20, and just selling covered calls on them. I don't care about capital appreciation. I'm just trying to squeeze as much premium as I can from them until I have to let the shares go. What would make me let the shares go is if the stock goes up too much or flies from this price here. So if Box is trading at $30, it'll be hard for me to sell calls at 18. So in this case, I'm going to sell my shares at 18, but I would have collected some premiums. So as long as it stays within this range, I can keep selling call options at this strike price. So I've got FUBO expiring at February 19. I bought it at 17.93, but I collected $1.13. If I go to orders executed and I go to Box, so I paid $16.80 at an 18 strike. So that means my max profit by February 19 is $1.20 for this position, but I could repeat it again if Box is trading at around the same thing. And then next I've got FUBO. This I got a really good entry on FUBO. I went to the 20 strike, so very, very safe. The stock is trading at 27 right now, so I'm really in the money on the call option. But look how much I paid to get into the trade. I paid $16 to get in at the 20 strike. So that means my max profit on this is $4, which is $400 by February 19. And I'm already at 50% profit. So I can already close this trade for $18. So I got in this trade for 16. I can close it right now for 18. I can close it right now for $18, and that would give me a $2 profit. But because I want to sell call options again and again, I'm just going to keep it till February, max out the $4 profit, and then see if I can sell another call option on it again. And then I've got Rocket. This one's down. So this one I bought at 21.6, but the stock keeps dropping slowly. So it's at $20 right now, but I keep selling call options on it anyway, so I don't care. Last call option I sold on it was at a 22 strike. So the 22 strike is my max selling price, but it's not even getting there because the stock is dropping. But I keep collecting premiums while I'm waiting for the stock to come back up, or even trade in a range. It could keep trading in a range. I don't care. That's actually good for me if it trades in a range, as long as I can keep selling call premiums. That's where my profit comes from, but from the selling of the call options. And then I've got Virgin Galactic at 23 strike. My expiry is April 16, but I collected a lot of credit on the way. Once I lose my position, I'm gonna add up all the credits that received and make a video about it. And finally, I've got Wish here, February 19, 20 strike. Let's see how much I got in. I don't remember. I think I got in at 16.5, yeah. So 20 strike, got in at 16.5, so that's another good one. If Wish stays above 20 by February 19, I'll make a profit of $3.50 on this position. Right now, Wish is trading above 20, so that's good. So this is a good position. And yeah, so that's what I'm trying to do here in my RSP. Just look for stocks that trade around $20 and sell covered calls on them. I'd rather do that than buy growth stocks. But I could also buy some growth stocks. I mean, I do have some buying power available, so I could buy some growth stocks. I'm actually considering these SPACs that just keep flying right before the merger, or even a little bit after the merger. So I'm thinking of looking for SPACs that have just been announced that are trading close to $10, and maybe just buy them and sell them either at a profit that I'm happy with, or even sell them right before the merger. I actually bought some of this one here, CFII. Alright, and finally in my RESP, the worst performing account is Intel, stupid Intel. I've got an average price of 56. Stock keeps dropping below 50. Right now it's above 50, so that's good. I'm very close to my 56 average cost, but I wouldn't be surprised if it drops again below 50, because that's been the story of Intel. And I'm selling covered calls on it. That's all I could do while I wait for the stock to come back up. My last call here expires February 19 at a 55 strike. So even the call that I sold is below my cost, so that's not even good. And I only collected 57 cents. I've had this for a very long time, so this is really a terrible position. I can't wait to get out of it. I'm just waiting for Intel to come back up above 56. But while I'm holding on to it, it pays decent dividends, so it's not bad. Let's go see what the dividend is. I mean, I've been receiving like $49, I think, in dividends. So dividends, dividend yield is 2.53. PE ratio is 10. So this stock is really undervalued. I mean, it should be It should go up. I don't understand why it's low. I guess because of AMD competition. All right, so that was my portfolio. I've got a lot of buying power in my TFSA. So if you have any suggestions, gladly leave them in the comment section below. I mean, some of these purchases were subscriber suggestions, so don't hesitate to leave them in the comment section below. Like always, if you have any questions, leave them in the comment section as well. And if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.